The US Federal Reserve slashed interest rates by half a percentage point in its first cut since 2020. Now, the aggressive cut signaled that the central bank, having largely won the battle against inflation, wanted to act boldly to keep the labour market from slowing too much, following weaker than expected August jobs data. The half-point move paves the way for lower borrowing costs on everything from mortgages to credit cards. It marks a crucial milestone for the central bank's historic inflation fight, which kept rates at a bruising 23-year high for more than a year. Listen to what Jerome Powell, the Federal Reserve Chair, had to say.
Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%.
And joining us to understand the larger ramifications better, Girija Pande, who needs no introduction. Thank you so much, sir, as always, for making time for us. Now, the decision to cut by half a point, do you agree that it telegraphs to the world that central bankers feel a sense of urgency to provide the US economy with swift relief from elevated borrowing costs, considering there were blaring calls in recent days for the Fed to kick off the rate-cutting cycle with a bang?
I think it's certainly a very bold move. I don't think the market was that clear that it would be 25 or 50 basis points, but it just shows that they are now worried about unemployment. The focus has shifted from inflation to unemployment levels. And I think that's what has prompted the Fed to balance this equation very quickly. I think earlier they were little behind the curve when they were raising rates. They don't want to be caught lowering the rate and being behind the curve. So you can see that they have actually moved quite boldly and quite fast.
Sir, do you endorse the central bank's move? Also sounds the all clear to banks in countries like India and South Korea, which did not want to lower rates before the Fed over worries it would weaken their national currencies?
Well, that's true. You have a gradual reduction we are seeing across inflation across countries. The oil price is down in nearly 20%. And that will, especially in the oil importing countries, that will be useful. So I think everyone will see that, well, with the US inflation rates coming closer to 2%, globally, we have already seen rate cuts in Europe. We have seen rate cuts in Canada and UK. So the Asian central banks have to follow suit. And they are expected to follow suit. Now, when they would do it, they will also look at their own inflation numbers. But I certainly think that with the gradual slowing of inflation in the US and in the global commodity prices, there is a good chance of rate cuts everywhere else.
In terms of sectoral impacts, though, sir, certain sectors are poised to benefit directly from the Fed's rate cut, many argue, like the information technology sector, for example. Is it likely to see increased demand as US corporations expand their IT budgets due to reduced borrowing costs?
Well, the big sectors which will benefit by it is, of course, the financial sector and the mortgages, and as you said earlier. But yes, the IT services business and the IT technology budgets will certainly be a little more relaxed. There is no doubt about that. But remember, I think there is a fear of recession also, because that is one of the reasons why this was such a larger cut than what we expected. So which way does the economy go is got to be seen. What is more important is what is the rate cut path, the path to further rate cuts. They are already expecting another 1% down the line. And so I think that is as important to see which way the economy will react and the response to this rate cut. But if the economy is as bullish as it is at the moment, especially the American economy, then yes, the budgets will be more liberal.
Well, the RBI's response on home ground to the Fed's actions will be crucial. Historically, India monetary policy has been influenced by US rates. However, our RBI governor has already signaled that India is not compelled to follow suit and reduce its own rates, as you've also emphasized, sir. Thank you so much, as always, for joining us with your perspective.